Welcome to today's market report.
World shares slid on Monday as US warnings that Russia could invade Ukraine at any time pushed oil prices to fresh 7-year peaks and sent investors scurrying to buy safe haven government bonds they have mostly shunned this year. Europe's stock 600 share index tumbled as much as 3%, and spot gold headed toward its biggest single-day gain in 4 months, even as Russia suggested it was ready to keep talking to the West to try to defuse the crisis. The United States is relocating its embassy operations in Ukraine from the capital Kiev to the western city of Lviv, Secretary of State Antony Blinken said, citing the dramatic acceleration in the build-up of Russian forces. Ukraine's government bonds slumped 10% to the lowest of the crisis, while strength in bullion and Swiss franc underscored the appeal of safe havens, even as Ukraine hinted at concessions to Russia. Markets in Europe were anti. Major regional bourses closed about 2% lower, and European natural gas prices for delivery in a month's time jumped nearly 10% to 81.30 euros per megawatt hour. The GBP/USD snaps 2 days of gains and begins the week on the wrong foot amid increasing geopolitical tensions in Eastern Europe, trading at 135.28. The market sentiment is downbeat as the Ukraine-Russia tensions still weigh on market players' risk appetite, as uncertainty talks and a mixed message crossing the wires keep some investors at bay, while others have turned to safe haven assets. The gainers are the dollars, yen, Japanese yen, and Swiss franc. The shared currency lost its ground for the third consecutive day against the British pound amid the risk of market mood. The euro-dollar printed a fresh weekly low under 113 from last week's top near 115. A recovery above 113.70 should put the euro back on track for 114, and the next resistance stands at 114.50. Above attention would turn to 114.80 area that capped the upside last week and also in January. The US yields have also given a boost to the greenback. The US 10-year rebounded from 1.90%. The dollar index was at 96.
This is today's market news. Thanks for listening. We'll see you next time.